It's been an interesting morning. I mean, it's interesting in that it's been kind of during daylight hours UK, which is usually these moves tend to happen like on the weekend while you're asleep. And so it's been interesting that it's been during some more kind of liquid trading hours. But I mean, like, let's put things back into perspective. Like, Bitcoin's back where it was at the start of the year. ETH is up 200%. We saw less liquidations on these exchanges in aggregate. We're at about $4 billion so far across three kind of distinct liquidation periods today. That's less than what happened overnight, kind of 17th, 18th of April, so last month. So, I would call it the big crypto
So it's still
crash
less,
of May.
still less than May's crypto crash. How much less? Do you know
April's.
the comps?
Well,
Sorry.
it's a bigger move on in kind of like spot percentage terms, but there have been less liquidations. I think we had more like 6-7 billion of liquidations, and that's if you're thinking about kind of market structure and exchanges imploding and these kind of real left tail scenarios. That's what you really care about is the exchange going to be left holding a bag of like insolvent sides of one particular trade, where the longs are basically negative equity, and the exchange has to bail them out.
Now, are we confident that we've got all the final numbers on liquidations, or is it possible that this trickles in over the next sort of 24 hours and we learn a little bit more about it, and it ends up being a larger event than we now think?
So you can track the liquidations themselves in real time, and they've been high for the month, but they were higher in April, they were higher in February. This is nothing like kind of March the 12th, 2020. We've had a big move in spot that happened during a period where leverage levels were not that crazy in the crypto markets. I think we could really have seen kind of fireworks if we had the levels of leverage that we had back in kind of January, February, and this had happened. But just looking purely at spot markets, like you look back at 2017, like we had 40% retracements inside of a bull market. I don't think that this is sort of another day at the office in terms of Bitcoin's moved down. We went from like 40k. We started off the day at 40k. We dropped to 30 basically, and then we're back at 38 and a half now. Market rebounded to 40 and has sort of been trading sideways since then. It's really kind of not, I think, the end of the world. There was a time not that long ago where this would have been a huge strain on the crypto exchanges. You have what tends to happen during these periods, and like we saw Binance sort of like didn't go down, but like it wasn't letting people withdraw from the exchange immediately. Like there was a few minutes of delay, and that's typically when the exchange is they want to just double check. They want to have a human double check that you're not in negative equity before you're withdrawing capital. I don't think there's some big kind of conspiracy to screw people here. I think it's really just the exchange making sure that they're never kind of under collateralized. Coinbase went down. It's not a pullback unless Coinbase goes down. Coinbase always goes down. Incredibly, I don't know why. So yeah, like Coinbase went down. Everyone else was basically up. We didn't have like matching engines shutting down. Markets were kind of clearing continuously. What does happen is the blockchains get congested. So if you're trying to move some Ethereum, for example, from exchange A to exchange B to collateralize a position, it can cost more or less to process an Ethereum transaction, and that's like known as gas costs. And gas costs are, historically have been sort of like 20 to 50 range in the past 6 months because everything's been going crazy. It's been going to like 200, 300. It spiked today at 1,500, which is just insane. Like we're talking about, I don't even know, like sending Ethereum from one address to another, which is like the cheapest transaction you can do, might have cost in the hundreds of dollars just to make a transaction. So it's just insane. But it's because, suddenly, people with big positions on need to move collateral from A to B, and they're willing to pay any price for it to just be in that block. And so they're completely price insensitive at this point. And so, the same sort of playbook played out. Like API requests to these exchanges will have gone up like 100-fold in a matter of minutes. the amounts of trades getting matched, like the volume will have gone up insanely in a couple minutes. You get these sort of bursts of enormous load on the system, and historically that is like taking the matching engines out in the most extreme case, but otherwise it's just like APIs either what's known as load shedding you. So there's a point at which, like, if you send too many requests in, they're just going to reject some of your requests, and they'll prioritize things like taking a position off, so like reduce only API calls, pulling your orders off the order book. But if you're trying to like market buy, you'll just kind of get load shedded and you'll have to resubmit. So yeah, like you have some load shedding. It's to be expected. This is what happens. Any good kind of systematic trader has kind of built their systems to kind of be resilient to that by, you'll have an API call budget, so that you always want to stay within your budget so that you're not getting load shedded. You'll be careful about like which order types you're sending, etc. Like this is all part of kind of microstructure that everybody has to deal with. And it's, again, like another day in the office, this happens. But like, yeah, Coinbase went down. It goes down because there's just incredible load on the system. I don't, all over Twitter, it's like, Coinbase are trying to screw the little guy, and they're doing it on purpose. I think they just need to get a better understanding of how these exchanges work, and kind of the
And do you think
technical,
Coinbase gets hit worse? Do you think Coinbase gets hit worse because it really is full of retail, and the way
Binance
people are handling the API? Yeah.
I don't know. I don't have a good answer as to why. I mean, they're incredibly well funded. They have very good engineers and product teams over there. It's not at this point excusable, and I don't know how it happens, but it does. Coinbase tends to just always go down, but in the long run, this is going to get fixed at some point.